Excellent. Thanks for the intro, Paul. Um, I'll actually start with a question of how do investors get their money back? And then let's work back from there.
Super.
So the the base plan is the money will be coming into at least one holding company, maybe more than one holding company as we scale, or as the different thematic or geographical demands require. And the holding companies will rapidly get big enough to be listed on a stock exchange. And by rapidly, I'm saying 5 to 10 years from the first money coming into a holding company, we expect to be at a point where we are listing on a stock exchange. So over that time span, the way people will get their money back is simply by the shares that they've bought through their investment go on sale on the stock exchange, and they sell it quite freely as normal on the stock exchange to a willing buyer.
Mm,
Prior to that, we'll be on a secondary market for unlisted companies. So again, the route to get your money back, complete liquidity, you can get your money out by selling your shares to a willing buyer on the secondary market prior to listing. And similarly, again, because we're talking about equity in a holding company, if somebody has a need to get their money out again relatively soon after putting their money in, this is not money that is locked away in a fund where you can't get it out. This is very much a case of you have bought tradable stock in a holding company, and all that's necessary is to find a willing buyer. Now,
mm.
I don't expect finding a willing buyer to be an issue even in the first few years before we're on a secondary exchange, in that I wouldn't be doing this if I wasn't absolutely convinced that this is the best place for me to be investing my time and my money. Otherwise I'd be doing something else.
Right.
And so I fully expect that as we begin to gain traction from the first investments, that there will be a rapidly growing awareness of what we're doing, an interest in investing money in this essentially new way of investing, a post-conventional way of investing. And in that sense, my expectation is that we will have more people looking to invest money than we are able to deploy the money each year. And that will immediately open up good opportunities for people who've already put their money in to have a private share sale, as you would with any company that is not yet listed or on a secondary stock exchange, to simply say, all right, I've heard that you want to put $1 million into Evolute 6. Well, I have $2 million worth of shares that I want to sell. Would you like to buy 1 million of them? And we would more than gladly facilitate that kind of sale. So getting your money out in that sense is, that's the base plan for getting your money out. Equally, there will be, as time progresses, not initially because we want to invest as much as possible reinvested into the businesses that we're building in our venture studio or the existing companies that we're buying and transforming, but there will be dividends that are paid out as well. So for
Okay.
those who are interested in a long-term steady flow, after the first few years of exponential scaling, there will be dividends coming out as well.